Hey, what's up, stock compounders? Brad here. So the Sequoia Fund just released their quarter one 2022 activities. Okay, they sold a couple positions and they added to a couple positions. Um, and here they kind of give a video describing, why they bought certain things and why they sold other things. Prosus was one of the sales in the first quarter of 2022. And this gentleman talks about why Sequoia Fund sold out of Prosus in the first quarter. So, of course, Prosus is an Amsterdam based holding company. There are a number of interesting businesses in there, but really the only one that matters is Tencent. So, Prosus owns 29% of Tencent. Uh, Before Prosus, there was Naspers, and there's still Naspers. And Naspers, I think it was 2001 that initially bought a stake in Tencent before it even went public. And they've basically held that for over 2 decades now. Uh, Tencent is a super app in China, so you kind of just gives a high level of what Tencent is. Ultimately, our investment in Prosus and Tencent was swamped by a deteriorating regulatory environment in China. It has been well publicized at this point that the Chinese government has cracked down on the technology sector, broadly speaking, and in particular on some of the technology giants. Now, Tencent has fared in some ways better than some of the other internet giants in China, but they've been impacted significantly. When we made the investment in Prosus, we understood that this was a risk and we built in a buffer, but clearly we did not build in a sufficient buffer, a big enough buffer. At this point, we just don't feel we have any great insight into how the environment over there is likely to evolve. So we made the decision to move on. The valuation is arguably still reasonable and it could perform nicely from here, but given our view on the regulatory environment and our inability to handicap it, we decided it was best to move on. Now, it came to my attention on Twitter that some of you outside of the US couldn't access this video. I found it on the Sequoia Fund communications page. I wanted to read basically the transcript of what was said about why Sequoia sold Prosus. My take, there's not a lot of meat here, not a lot of substance in the explanation about why they sold Prosus. Now, you can't really argue with them, right? I mean, what they're saying is there's just a deteriorating regulatory environment around these big Chinese tech companies. Um, so, obviously the news, the headlines have really run with that story. And as a result, the stock prices have taken a big hit over in China. But I see it a little bit differently. I personally don't think the Chinese Communist Party is going to kill their golden geese, right? Tencent, Alibaba are two of their most prized golden geese in terms of public companies. So I guess I have a different view than Sequoia. I think the price today more than compensates for this, political uncertainty, right? This regulatory uncertainty that's surrounding these internet giants in China. But we're all entitled to our differences. Just wanted to share with you guys the position from Sequoia Fund on this issue. There's not a lot of investors that I follow that own Prosus, so whenever someone gets out and talks a little bit about why they got out, it gets my attention. So just wanted to share this with you guys. It's not changing any of my perspective on Prosus or Tencent, but hopefully you found it interesting, maybe even insightful, hopefully more insightful than I found it. So that's all I've got for today. Thanks for watching, and I'll see you all in the next one. Take care.